Hey everyone, me Kevin here. Let's talk about AMC because AMC is up 2,900% this year. It is up 95.22% today. That's almost a double. And it is up another 5% in after hours, currently trading at $65.70. So what the heck is happening? Is it a gamma squeeze? Is it FOMO? Is it a short squeeze? And what are the strategies for investing in AMC? Is it too late to buy? Is there a protected way that we can buy and try to make some money versus a lot of money? Should we bother? What am I doing? What have I done with the money that I said I would invest into AMC? Well, let's talk. First, thanks to the COVID pandemic, obviously, and many lockdowns, AMC has been brutalized in the market, and it's not a surprise that AMC is not expected to be profitable at any point for really the next 3 years. In fact, forward guidance right now, based on Wall Street indicators, are that we're expecting negative earnings for AMC through at least the end of 2023, and there is no guidance for 2024 or 5 that indicates profitability. A lot of this has to do with a lot of leftover debt that AMC still has on their balance sheet, which has led a lot of folks to say, hey, AMC should just sell a bunch of shares, especially while the price is higher, to start eradicating their debt, which is exactly what they did yesterday when they sold about $8 million worth of shares. But they got a lot more debt to go. So there's definitely more capacity for them to sell a lot more shares. But let's focus right now not so much on what AMC is doing, because ultimately what AMC does from a business point of view has to be up to them and will likely be in the best interest of the company. Because keep in mind, if a company sells shares, even though that dilutes the value for shareholders, especially if you own the stock, that means you own a smaller slice of the bigger pie, it does give the company money to buy other movie theaters or pay off debt, which ultimately is a good thing, because as a shareholder in the long run, you want the company not just to survive, but to invest and thrive. Very important. But now, we got to talk about, more importantly, the share price action that's happening right now. So, thanks to measures like the short interest, we are able to notice that companies like AMC since March has had an increasing amount of short selling pressure piling into the stock. And it's not just AMC, it's companies like Workhorse, Clover Health, many SPACs, even Cathie Wood's ARK, Invest have been shorted like crazy. And many companies have seen their short interests explode, especially since hedge funds started shorting in February, specifically biotech and tech, and then eventually online consumer discretionaries in February and March. They ended up making a lot of money shorting these companies, and they've moved into what else can we short? This is why we started seeing the AMC short interest move up again at the beginning of May to about mid-May. We started seeing short interest go up, more short pressure, because the hedge funds and institutional investors or anyone shorting, they're looking to make money. In fact, they're not just shorting biotechs and then techs and consumer discretionaries and then some of our recovery plays like AMC or the SPACs or whatever. But there is also a lot of speculation that hedge funds are part of the reason why we're seeing a massive crypto sell-off, or at least have seen a substantial crypto sell-off, in that hedge funds were looking for the next best thing to short. And what do hedge funds have access to that we don't? Shorting cryptocurrencies. And so maybe they shorted the snot out of cryptocurrencies as well. And so this obviously frustrates a lot of us retail investors because we don't even have access in many cases to short cryptocurrencies. And even if we wanted to, most of us don't like betting against our futures. Most of us don't like betting against our retirement portfolios or betting against the companies we work for or shop at or support. Short selling, even though short sellers like to say it's good to weed out fraud in markets, short sellers generally aren't liked. There's a reason Elon Musk sells Tesla shorts, like literally shorts, and they're red, and Tesla sells them to make fun of short sellers. But anyway, retail investors in general and some institutional investors on our side are pretty tired of short sellers winning. And so AMC has recently become the battlefield to fight back. So get this. In a typical week, AMC usually has a trading volume of around 20 to 50 million shares per week. Well, last week, AMC traded with a volume of over not 20 to 50 million, but instead 2 billion shares. To make that a little more clear, if in a usual week we have 20 to 50 million, now we've got 2,000 million in shares volume. And this week has only been 2 days long, and we've already had 1.234 billion shares already traded. That's more than half of what we've had last week in just 2 days on a shorter week here. On top of that, there are an insane amount of call options that have recently been piling in on AMC. A typical call option on AMC at any given price usually has like 3,000 to 5,000 contracts on it. The highest put option contract for AMC right now on June 18th is a $30 put with 32,000 contracts. That's a lot, but get this. The highest option available for calls right now on AMC is the $73 call option. The $73 call option for June 18th has 75,863 option contracts on it. In other words, on June 18th, 7.5 million shares of AMC have the right to be bought at $73. And those will be completely worthless, those contracts, if AMC is trading for even a penny below $73. Or they could be very valuable depending on how high AMC goes. But determining how high AMC can go, whether it can go to 1,000 or 10,000 or 100,000, is very difficult at this point. And that's because this rally is not fundamentally driven. It is not a fundamentals rally. We're not looking at the price to earnings ratio or the future price to earnings ratio or the future cash flows or doing a discount analysis on this to determine, okay, what is this worth in the future? Oh, wow, it's undervalued. No, what's happening right now are a combination or is a combination of three things. I'm going to explain each of these, and then we're going to talk strategies. So, number one, gamma squeeze and delta hedging. So this sounds really complicated. I'm just going to make this very, very simple. So delta, it has to do with the change in price of an option. Gamma has to do with the rate of change of the change in price. Now, if you didn't understand what I just said, don't even worry about it. Because here's the real simple bottom line, because that's delta hedging, gamma squeeze. We could do a whole video on that, okay? Let's just make it even easier than that. Now that we've defined, we know what those are. Okay, they have to do with options pricing. Let's put that aside for a moment. Let's make this very simple. Call options. You know what a call option is? If you buy a call option, you have the right to buy 100 shares per option that you have. So if you say, I'm going to buy one $73 call option with a strike on June 18th of 2021, that means on or before June 18th, 2021, you have the right to buy 100 shares of AMC at $73. But for you to have that right, somebody has to be willing to sell you those shares. If they don't already own those shares, the person who is giving or selling you the contract has massive risk, because if the share price becomes much more expensive, then it's going to cost them a lot of money to buy those shares to give you the right to buy them at $73. So the way to offset this risk or hedge that risk is by the person who's selling you that call option going out into the market and literally just buying the shares. So they have the shares available for you. That way they can sell you the options contract, make a premium for selling you the option. But what happens then? Oh, wow, all of that buying of shares drives the price of the stock up. People who bought call options are like, oh, wow, I just made a lot of money on my call options, because as the price of the stock goes up, the price of options goes up, sometimes 2 to 3 to 10x as fast, depending on the duration of the option. And now people buying call options are like, wait a minute, I'm making money really fast. And I'm telling all my friends and family about all this extra money I'm making, or maybe I'm not, maybe I'm keeping it a secret, fine, whatever. And guess what? You go buy more call options, which again forces the seller of those call options to go buy more shares. So this literally leads to this perpetual feedback loop and perpetual energy of more people buying calls, more shares being bought, price going up. The second thing that's happening is FOMO buying. People are seeing people become overnight millionaires by 5 or 10xing their money with options really quickly. So more people want to buy options, leading to more gamma squeezing in the options market. It's nuts. The price continues to go up. And now this cycle can't go on forever, but it can go on for a while. Why can it go on for a while? Because of number 3. The more the price goes up, the more short sellers get squeezed out of their short positions. That's because short sellers are borrowing their shares, paying interest on those shares, and they risk getting margin called because they're borrowing. Anytime you're borrowing, if your equity goes negative or falls too much, you can get a margin call, which means you have to either bring in more money to reload your shorts, so to speak, add more money to make sure you have equity, or you just got to give up your short position and end up covering, which just literally means buying the shares. So if you literally missed everything I said for the last 2 minutes, you can either rewind, or you could get life insurance in as little as 5 minutes by going to metkevin.com/life. Or I could just recap it by saying people's buying lots of shares because people's buying lots of call options. And because the price keeps going up, more people keep buying. And the more people keep buying, the more the price goes up. The more short sellers are like, oh, damn, I don't know that I want to be in this trade. I'm going to buy more shares too to cover my short position. Okay? So in other words, lots and lots of buying all together. And it's all tied together under the guise that we are apes holding on strong because it's not a guise. Maybe it is the truth. The stronger retail buyers hold on, the more those short sellers who are borrowing, who are paying interest, get weaker and weaker. They start getting paper hands and they start covering. Because see, as retail buyers, as long as we're not borrowing, we're not paying interest, we're not getting short squeezed, doesn't matter to us. We can hold on for dear life way longer than they can because they're paying massive loan fees every day or having to feed the kitty by bringing in more money to prevent those calls, those margin calls. Yeah, so what can stop this? Well, eventually people start selling. Eventually people start taking profits, or you get brokerages that because of the DTCC or whatever, stop allowing us to buy out of the money call options on AMC, kind of like what they did with GameStop back on January 28th of 2021, which I'll never forget because it was my birthday and I covered it live. And this is why you always want to make sure to subscribe to my content. Hit that subscribe button, and you can even type Meet Kevin into your app store for Android or Apple. And when I post a video like I did this morning about buying workhorse stock and then it went up like 19%, you can make sure you get those alerts too. Totally free app. Just type Meet Kevin in your app store. But anyway, where do we go from here and how do we make money? Well, remember, where we go from here could potentially be dependent on what happens at brokerages. If they restrict us from buying again, we stop that gamma squeeze from happening, which means we stop the potential short squeeze from continuing, and prices could come down, especially as folks decide, you know what, it's time for me to cash out and take some profits and take some tendies home, take some of that bacon home. Or we could potentially, which we are seeing right now, see a lack of other call options available being sold to us because market makers say, you know what, we're just not selling any more of these call options. It's too risky, and then we have less to buy. And then maybe we're not buying those out of the money calls anymore, and there's less gamma squeezing that needs to be done in the first, or that ends up happening in the first place because there's less delta hedging. Again, all that basically means is there's less pressure on buying the stock. And so how do you make money on AMC? And is it too late to buy? Should you even bother buying AMC right now? Well, here are a few choices that you have. Number one, you could literally just buy the shares. The most you could lose with this strategy is 100%, but usually you don't lose anywhere near 100% unless the stock goes bankrupt. So for example, if you put $10,000 into AMC at $60 and it goes to $30, hey, you lost $5,000, you lost 50%. If it goes to $15, okay, you're down to $2,500. You still have something left, right? The odds of you losing 100% generally relatively low when you buy the shares. Or you could buy options, which the cool thing about options is they are a form of leverage. If you get shorter-term call options, you have a good chance of losing 100% of your money, but you could also 2, 3, 4, 5, 8x your money really, really freaking fast. And this is why a lot of people are like, I don't care, this is my YOLO, I'll put my money in knowing I'm gambling, knowing I could lose everything, but right now with the movement, the roulette wheel is tilted towards green, okay? It's tilted in our favor, is what it feels like. But we don't know how long it'll be tilted until it tilts back. It's just an odds game, and it's a timing game. The other thing you could do, and I did this morning, is you could sell a put. Now, usually when people hear put, they're like, oh my gosh, put, that's associated with being bearish. No. Selling a put is actually bullish. See, what I did was I sold a put when AMC was at about $59. I sold a $73 put, and I sold 7 of those contracts. That means that I got a $17,000 credit. So in other words, I got paid $17,000. In return, I promise that this Friday, I will agree to buy AMC shares at $73 if the price is less than $73. So if the price of AMC shares is $60 on Friday at the close, I have agreed to pay $73 for 700 shares at the close of business on Friday. In return for me making that agreement, I got $17,000, which is actually kind of like buying the shares at $48. So even though most of the day today, well, I would say probably like the last 2/3 of the day, AMC was trading for around $58 to $65, I was basically able to buy AMC shares for $48, which is really cool. And I did that by selling a put. Now the downside is if AMC goes up to $100 or $150, I don't get to participate in that gain because all I'm going to get to keep is my $17,000. I don't have a call option, so I don't have a right to own any of the shares. I would then have to go in the free market on Friday, take my extra 17 grand, and go shopping for these now more expensive shares. The other downside would be if AMC shares fall a lot, I would be forced to buy at $48, which could be overpaying, but I did get paid that $17,000 credit, which is letting me buy them for $48, and I'm okay with that because I said I would be buying AMC shares this week. So that is a creative option that you could use to lower your cost basis when you know you're going to buy within a time frame anyway, and I made an agreement that I would buy this week, and so that is an option that I took. It actually de-risked my investment, and it gave me an option to get into AMC at a lower price, which is really cool. And if I don't get assigned the options, or if I don't get assigned the shares, I could always buy the shares. Now I have an extra $17,000 as well, which is kind of cool. So it would be a profitable move. I'm very, very happy with the decision to sell some puts. We'll see what happens though. I'm very, very tempted to buy calls. But remember this, every day the market is green, your risk goes up. I would love an opportunity to have a little dip in the market and then buy some calls. But hey, I don't make the market. Number 4 way to make money on AMC is you could do the dirty and take bearish positions like shorting, buying a put, or selling a call. But we're not going to discuss those here because ultimately that's for hedge funds or people who want to hedge their portfolio, and we're not going to talk about that. That's an option for you though, and I want you to know that's available, but it's not something I'm considering doing, and it's not something that I think most of us watching really care to hear about right now. So, what about the future? Well, folks, remember, as price comes down, your risk goes down. As price goes up, your risk goes up. Price is way up. This is very, 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 very risky. Now, with great risk can sometimes come really, really, really great rewards, and I think that's what we're keeping our fingers crossed on, is that we can on Friday buy some big fat call options, or tomorrow buy some big fat call options, make some really big tendies, take that money, invest it into either more call options or just take our money and run and go, wow, we won at Las Vegas and we won at the casino. That's great. You just have to know when to walk away from the table. And for right now, I don't think anybody's walking away from the table because this is Ape Nation and we're holding on. Now we'll see what happens going forward. But I'm excited for Friday because if I don't get assigned those shares, I'll probably be going shopping for some options. We'll see. Not financial advice. Don't sue me, bro, if you lose all your money. Remember, just for clarity, I am trading into AMC right now with less than 0.5% of my portfolio. So I want you to always know, risk adjusted, how much of my portfolio I'm putting into these plays. Thank you so very much for watching, and folks, we'll see you in the next one. Make sure to subscribe if you found it helpful.